Welcome to the StockMentor.com studios here in the beautiful Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple. And I think that perfect scenario I had talked about a few days ago might have played out today. We saw an end of month close below the 1066 area, which is where I said the bears definitely wanted it to close. And they got it. And with that, they gained the momentum. Were able to turn this thing around and now have just taken over in a big way today. Starting to see what selling power is like all over again. Dow down 200, S&P down 27, and the Nasdaq down a whopping 65 points today. Led all of them at 3%. So a huge march down. Really hope you guys went short. Hope you found something to trade today. There were all kinds of things to trade today. So I hope you guys were able to get in on a little bit of the action. I had some pretty good calls in some of my stocks that we'll get to later on that I hope you guys were watching. And we're able to maybe jump in, take a few shorts, buy a few puts, whatever the case might be, and make a few dollars today. Got lots of emails from people saying, wee and woohoo and look at the bears go and all this other stuff. So they were all prepared. That's awesome. That means that they were ready for this move. Hopefully they were able to capitalize on it as well. And we've been talking about it for a while. So I'm glad that some of you were able to cash in on it. Here's the Dow. There's the Dow down 203 points. You can see here down 2% for the day. Really started this morning when we started to break down below this previous support line here. And once we broke this area here, we started to see a lot of the bulls cover. That drove the prices down even further. Now we're back down to another support area. Not real strong support, but certainly capable of a bounce in here. Maybe a short little move back to the upside to retest some of this previous resistance now and see if it'll hold coming into the next few days. The NDX on a 60-minute. Here was your tell. Broke that 200 moving average and it was off to the races, and that was later this afternoon. We saw that happen, and you should have seen the tech stocks drop. We'll get to Apple here in a second, but that was one of the many calls I had on some of the tech stocks. But you can see here, this was the line that I said needed to hold. We had already broken out of this symmetrical triangle, came back, retested it, and it held. Now it was a matter of, could the bulls make one last push and save face? And once it broke the 1690 level, which happened earlier today, there was really no going back. It broke this level here, hit a high of 1711, so it was just above this area here. But once it broke it, it never was able to get back above it, and it was off to the races for the bears. The NDX on a daily, look at this little dotted line I had drawn in here. See how it had held yesterday perfectly, came down, touched that, jumped back up. Today, yeah, not so much. So a great breakdown today. Once we got below that 1690, it was all over for the bulls. They were not able to hold on to anything and absolutely got their butts kicked. Now we're coming back down to this channel support down here. So we're going to be looking for a bounce right down here at the 50 MA and right here at this bottom channel line, which should be right around the 1650 area. And it gives us about 16 points or so before we can expect to see maybe a little bounce here. It's possible that it opens here in the morning too. So if we have a gap down in the morning, look for that gap down to be right at or around this 1650 area. That would be a very logical place for it to gap down to in the morning, right back to this previous support. On a weekly, this is why we don't look at the stuff so much during the beginning of the week and more towards the end of the week. Now we can start to see what pattern is playing out here, and you can see. Let me update this here. Get this in a little bit closer. There we go. That we are back down below the 200. See how we broke above it last week and we stayed above it. And I said, well, based on what we saw yesterday, you have to kind of give the credit to the bulls. It was kind of a high basing formation, but the week wasn't over yet. There were still 2 days left, and this is why now that we're going to maybe potentially, tomorrow hasn't closed yet, so we don't know, but if we close below this area here, certainly not bullish by any means at all. The bulls wanted to keep it up and above this area and were not able to do it. This was not a good confirmation candle last week, and this is certainly not shaping up to be anything that the bulls want to see this week. The SPX on a 60-minute. Here was the symmetrical triangle we were in. Here was the breakdown of that symmetrical triangle. And notice how we fell right back here to this previous support, broke through it, retested it right away. Could not break it. We tried here. We tried again 2 hours later and could not break back through this 1040 area. What did I say about the 1040 area? Yeah, that's what I said. Huge, huge support for the bulls. They really wanted to hold that area. And I said if they couldn't, and if they didn't, look out. The bears could certainly take over if they weren't able to regain it by the end of a day and close above it. And they were not able to do that today. And we saw the bears pile in. This 1040 line was definitely the line in the sand. And you could see it happening as it would touch it and go and touch it and go and touch it and go. And eventually it just could not hold it anymore. This momentum is very strong now. And all of the market internals were confirming the move down today. So I would expect a lot more weakness in the future. Now look where we came back to, though. A very logical place to end the day, and that was right on a support line. So very logical place. We came up here, kind of hopped above this little channel we were in, came back down, retested the 20, came back up, retested this upper trend line, and at that point fell out a bit. Now we're right back down to this lower channel trend line. Next logical support below that is the 1020 area. So 1030 is where we stopped. 1040 was our, oh, that's interesting. So 1040 was the big one I talked about. If we broke that, it would be major for the bears. 1030 would be our next line of support. 1020 is the one after that. Let me show you something quick. Once again, if you're curious about the intraday emails that I send out for my newsletter subscribers, this is one of them. This came out today, early this morning. 9:20 a.m. is actually 11:20 Eastern Time, so play it as you will. But the SPX has now broke the 1040 mark, and that is not good for the bulls. They need to recapture the level sooner. The bears are going to gain momentum here. The bulls certainly do not want a daily close below that level either. A continued push down has 1030, then 1020 as further levels of support. 1038 here on the SPX is a support line, so we may slow down or pause here for a little while, but all of the internals are confirming this move down. So for those of you that have not signed up for the newsletter, it's a whopping $15 a month. Woohoo! And these are the type of things you get. If this can help you in your daily trading, it's well worth the $15, just knowing this alone. I made mention of the 1040 mark. I made mention that the next level would be 1030, then 1020 below that. So it was all here for you in writing. Early this morning, you would have been more than prepared for the market drop this afternoon. One other one that I sent out today. I sent this out later in the day. It would have been about 1:48 Eastern Time. And it said, I think this may be the beginning of something very bearish in the markets. On this bounce, look for a test and hold of the 1040 on the SPX, and that's precisely what we got. We got a little bounce in the markets. They came back to test this 1040 area and then completely fell apart the rest of the day. So if these are the type of emails that can help you in your daily trading, sign up for the newsletter. Whopping $15 won't break the bank. Okay, back to the markets. So going forward, we're watching this 1030 level, then the 1020 level below that for support on the SPX. As we move on to the weekly, we are now getting close to the week, and notice how this line here, this was a weekly line that I had drawn in. This goes way back to like '08, so it's a very powerful resistance line for me. And you can see how well it held 2 weeks ago, held last week, even after a teeny push up. And now it's falling here. Keep your eye on this. This is a rising wedge. It's a very bearish formation. We get below this and close, more importantly, close below this, and the markets could be in for a pretty sizable pullback in the future over the next few weeks. The VIX confirmed up 10% today. So a huge move by the VIX on the weekly. I said I'd like to see it get above the little green line. Sure enough, it did today, and now it's approaching that 30 mark. VIX gets up and closes above this 30 for a weekly close, and that's going to be very, very bearish for the markets. Right now, it's already looking very bearish from a weekly standpoint. Keep your eye on that. Apple.